Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. As the market slowly digests yesterday's price action, the Australian GDP figure came in on target at 8.8%. From the release, the market has remained mixed in terms of direction. Earlier in the week, the RBA indicated that it would not raise rates due to low inflation. However, overnight, the Bank of Canada did raise its benchmark rate by 25 basis points to 1%. This is the second increase since July. Aussie CAD collapsed from 98.90 to 97.30, with dollar CAD falling from 124.14 to 121.95. If you're trading that market, it now looks like a small rebound is in the making. Today we have the retail sales and also trade balance. The market is forecast for retail sales at 0.2%, previously was at 0.3%, with the trade balance previously at 86 billion, and the forecast is seen at 93 billion. Overall, my view is that the market will fall towards 83.30 to 80.65, and if the technical implications do come through to a bearish fact, then we should see a move towards 79.45 and reassess from there. The US dollar still remains to the lower side of the range, as tension still holds in the northern Korean peninsula, with the US dollar index, which measures the greenback strength against a trade-weighted index of 6 major currencies. The market is still lingering towards the upside, but I do expect to see 45 to that rejection point from last Friday of 70.75 to still cap any rally. Tonight is the ECB monetary policy decision, along with the ECB's rate statement, and the market will be reading very closely to what President Mario Draghi has to say, and whether he starts talking down the euro, for one thing, and also if there will be any hints to the ECB's monetary policy, such as withdrawing stimulus, which is likely to have a sharp impact on the euro. So to reiterate, I still expect to see the bearish view to come through towards 118.65.70 as a target, and then maybe lower to 117.90.95. At this present stage, dollar yen, it still seems contained above that key level, 108.30. With the minor support now seen at 65, I do expect to see a potential rise. Purely for the fact is that little has escalated since earlier in the week from North Korea. So the market should resume back towards its natural course and expect to see a slightly firmer US dollar and a weaker yen. As long as we don't go beneath 108.30.35, then I'm content to look towards 110.20 as an overall objective. That being said, if we see a move sub 108.30, this will give grave concerns that the US dollar will weaken further, and also look towards a target of 106.75 and reassess from there. Well, the pound rallied overnight but did not continue, and as you can see, the market is struggling towards that 130.50 level. Overall, I expect to see further weakness to return to the pound and look back towards 129.75 as initial target, with 128.95.15 beneath. The gold outlook failed to produce any new highs overnight, with 42, and the previous day was 44. In light of the current pattern, it is breaking down, and I still hold to the view that the market can easily fall back towards 1,311 to 12, where this uptrend is, with the immediate support coming in at 29, and beneath there was a previous low of 26. But that being said, we still should not forget that we have a political tension or geopolitical tension out of the US to North Korea, and with the recent news that North Korean diplomat did warn that his country was ready to send more gift packages to the United States as world powers struggle for response to the Pyongyang's latest nuclear weapon test. What did recently recapture the bullish momentum for the gold this week was the recent news from the South Korean's Asia Business Daily, citing an unidentified source that North Korea is preparing to test another intercontinental ballistic missile. Other concerning factors was a radiation leak at the site of the North Koreans' massive bomb test is inevitable. A Chinese nuclear weapons expert warned after authorities in China reported that the mountain where the explosion took place had collapsed. One thing to note is that China's Earthquake Network Center recorded 2 earthquake tremors. The first one came in at 6.3, but the second one came in at 4.6, which does suggest that the mountain may have collapsed. So overall, as I mentioned, it will the target on the upside still holds to 1,360, but I believe the market will stab at this region, and it may be difficult to trade. But overall, I still expect to see weakness to return. The pattern in silver is still quite concerning, purely for the fact is you can see all these dojis coming through on the daily do suggest that there is a bit of a firm cap around this 118 figure 10 level. With the market slightly weaker today, I expect to see a pullback towards the trend line, which comes in at 45, with immediate support coming in at 65. With the technical implications still not as bullish as the market would like to believe, could see this weakness towards this level and reassess from 45. To wrap up with oil, market overnight rose further as strong global refining margins and the reopening of the US Gulf Coast refineries added initial demand and also support to the current bullish outlook. After the recent sharp drop due to Hurricane Harvey, traders are now a little bit wary of Hurricane Ira, which is ranked as one of the 5 most powerful Atlantic hurricanes in the past 80 years, which is passing over the northernmost Virgin Islands on Wednesday night and now heading towards Florida by the weekend. This will again raise concerns and may knock out a major demand center and cause more fuel shortages. Therefore, my view holds towards $50 a barrel and reassess from there, which could extend towards $52 a barrel. So do be a little bit wary if you're playing from the short side. I don't recommend to go short towards this region, purely for the fact is that we could see a break, especially with the indicators coming through slightly bullish. Dips on the day should remain focused around the $48.60-70 as a buy zone. And as I mentioned, we could see this market still stretch to the top side. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day that's ahead of you.